Hello, hello, hello. Excuse me. Wow. Wow. I switched to half decaf espresso shots and it's already my voice is gone. Already. Wow. Okay. So, how is everyone doing today? Happy Turnaround Tuesday. We didn't have really a meltdown Monday, so although we're not going to stay in this area very long, I'll get into that. Hey, hey, waka waka. I like just go from Anissa. I know you're trying to type. Good morning. I just like go. Go with it. Let's just go. A pop, then a sell off. Don't know. We're just not going to sit here very long. Good morning, Patrick. Good morning, Davy. Why would no one in the right mind go long into all the headwind? But there could be long trades coming up. Again, you don't know which ones are going to work and which ones aren't. You got to follow the probabilities. And we have two distinct camps right now. As I talked about, people just buying. Hey, we're guaranteed fourth. You just hold it through the end of the year, guaranteed rally. Then the people are looking for gloom and doom. What if you get the rally, then the early sell-off, or the capitulation move, then the rally? Could be a bunch of stuff. That's why I don't know. Gotta trade the systems. Gotta trade the numbers. You think anything over CPI 8.3 is a minus 5% day? All right, you're on the record. You're on the record. Good morning, Rams of Fall. Good morning, Legion Reaver. I agree. But we shall see. Remember, the markets can go, even with sticky inflation, can go into bull mode for a while. We've only had a couple bear market rallies, and this last one petered out pretty quickly, up 6%, and then retesting this low area. We will get another bear market rally before these bottoms are in the longer term. You're welcome, Anissa. Saying that overnight I did notice a double bottom on the 3-minute. All right. Careful, Waka Waka. Good day, Christoph. All right, I didn't see that yet. I'm a little behind on my news feed. So let's just get by to it. Hopefully, with the decaf, there will be no rants. It'll be even keel. Although I'm going to pre-warn you, if Janet Yellen or Kuroda from Japan get an award for economics, then all bets are off in terms of rants. All bets are off. So today we have the Economic Optimism Index coming out at 5 Central, slight beat. Red Book coming in pretty big contraction. This is consumer really starting to slow down because this is not inflation adjusted. This is a big warning from my book on consumer. We'll see the Investors Business Daily Economic Optimism, not expecting a huge change in that and not pretty much going to probably move the market. This silly consumer inflation expectations, not expecting much. We got Harker and Mester. Remember, we had a slightly dovish tone by some Fed speak this afternoon, but we'll have to see if they start reiterating that more and more. Also, remember that the big info, the PPI and Fed minutes are tomorrow. So if things may be positioning for that. Mixed thing, I did want to touch on TSM. Remember, I talked about with the sector being negative. I'm using this as an example because this isn't the only thing. You're going to see, yes, we have cutting off chips with everything. I know that, but you're going to see more things, especially with earnings, with guidance, and with news that could have negatively affect companies have bigger impacts. So that's when the headwinds. The problem is you cannot predict these. Besides, what I'm saying is it's why even when we get the bullish moves, if you're trying to play individual stocks, it can get a little dicier. There are some times I prefer to play the indices or sectors as a whole when they have some more bullish moves, because it would be, again, a counter trend move. because pretty much besides energy is all in sell mode. And why? Because when you get individual things hit, it somewhat dampens it. Oil continuing the slight pullback. We talked about trailing the stop there. Pretty mixed. We got healthcare, some drug manufacturers up this morning. Healthcare, Fed watch at 80. Still in negative gamma. Remember, also put calls by strike. I might have to start this earlier. One thing I wanted to point out, why I've been harping on this with all this negative put gamma, you don't really get call gamma until back to 3,700. That's where it gets interesting. Why am I harping on all this gamma down here? Just real quick, we'll probably have to go into this later today in the afternoon session, because this is for a 25 strike. This is modeling. It wasn't done by me. I'll have to model it out myself. But this is where you have the delta and the gamma. And you see once it's around at the money, you're at peak gamma. And your delta can move drastically. So when we're in overall negative gamma and your delta, you see how it steepens and it starts flattening up here, flattening down here. But this is the steep part. This means delta is changing rapidly. So what does that mean? That means more rapid hedging. So remember, more rapid hedging when we're around key strike prices. Well, oops. Why did that change? By the way, no key earnings. So let's just get that out of the way. So why do I bring that up? Because right here we got 3650s, we got 3625s, we got 3600s, and then even on a rally we got 3700s, all with put gamma. So that really kicks in. So even on a rally, that can also lead to more gamma kicking into on the upside rally. So we are in a very volatile area. Fear and greed index still in extreme fear. All right, so where does that leave us? Where does that leave us? Let me get to some more comments. Welcome, Sterling. Scary statement. Fred Prime Minister born on refinery strikes. I asked prefix to seize personal needed. Oh boy, we're seizing people now. Fantastic. This is just indicative of the overall energy going on. This is what's scary. We have a lot of personal freedoms are going out the windows. Didn't talk much about PayPal, but that's just another warning sign. Hey, we don't like what you're doing. Your stuff is our stuff. Look at it from a macro perspective. Meta got a price target cut. Thank you. I did not see that. Hey, Christoph, welcome. Thank you for putting in this information for everybody. Also, I really appreciate the comments. IMF chief economist says energy shock, especially in Europe, is not transitory shock. Also, remember, see, you have positive headwinds for energy. You also have for energy prices, not for energy itself. You also have China overnight, their major newspaper still advocating for this zero COVID policy, and they have more COVID cases. You have China lockdowns, especially going into winter. We could see repeated ramp-ups in China and lockdowns, which is negative for oil. So we're in a push-pull environment on energy. From the European standpoint with natural gas, from the China standpoint with crude oil. So fascinating times. Good morning, Connor. All right. Key stuff. Aggressive buy still above yesterday's high. What am I watching for? First thing would be another aggressive buy on a 4-hour close above the last 4-hour high. 36.1550 only on a 4-hour closing basis into a clear path. So that's the one thing I'm watching for to the potential upside. No, this is not a double bottom. So that's what I'm keying off of with we're into a little clear path move here. Breakdown zone about 36.33. End of the clear path technically coming in about 36.47. One way I touched on yesterday, just to not going to harp on this very long, but when you put up been asked about market profile, Again, you have a point of control right around 36.29, and then you have this major volume area right in here. That is why, and you see point of control actually coming in right here about 36.33 based off the 1 hour, and I know it's technically 30 minutes, I just don't use the 30-minute chart. But here's what the point is. Running up into this area, there is major resistance. You can see it with the chart. You can see where all the volume is going off at. And right now, right below here is pretty key support. That's why I will be watching that. Can't get, not going to harp on that, just showing you how I fine-tune stuff since it was brought up yesterday. We are slamming into the 4-hour rotation zone. That's why I'm paying attention here, because if we do get that close, we could do a retest and the bullish run. Can't get overly bearish until below 35.90, and below 35.90, rapid test of the lows on Sunday, and then the potential breakdown play. I'd be targeting overall 35.40, which we could get some interesting moves down. If we do get the bullish play and we get a more substantial rally, I'm watching yesterday's high on a closing basis, because that triggers an aggressive buy with further price action into the rotation zone. And again, we're still stalling out. We did hit that 87.5. We are now peaking between the 87 and 100. That's why I'm focused on a potential bottoming play unless we start breaking below this 35.90. Then I really tip back to short-term bearish mode. So they don't let us trade peacefully. Well, you'll get more Fed speaks today. Nasdaq, pretty much the same analysis. And by the way, we still have these longer term doubles in play. Little stuff for the short term reverse harmonics. So we start the breakdown here, 1786. Then 10,786, 10,732, and then 10,681. Major overhead resistance is the prior breakdown, 11,058. Really the only thing besides a key break above, starting to get above about 11,035. Minor bullish. It would be an aggressive buy above this 4-hour high. Start getting more substantially bullish up above about 11.1. No, this is not a double bottom because of where it is. It's very lopsided with this flat area. It's not a valid pattern. The only thing is you had a little shorter term double. That is confirmed and triggered. It's horribly sloppy, but you know, that's the only thing. I'm not trading it on a 15-minute. I'm just watching it on the 1 hour for the break back up here. I'm also on the key side. If we don't really have a lot of tick, I know more people have been following the tick. If we don't get strong one way or another, we could stay choppy through today, going into the PPI numbers this morning. Remember, PPI isn't as major as the CPI, but you got PPI followed up with the Fed book. Or the Fed meeting, I shouldn't say Fed book, Fed meeting minutes. Dow, pretty much the same analysis. The key breakdown area, our breakout area is 29,360. The breakdown area now is about 29,000. 29,000. Dow holding up better. You see has not hit that 87.5 yet. So that's what I'm watching here on the breakdown for the Dow. The Russell also minor bullish above about 1697. Significantly bullish above 1707. We start breaking down below 1680. My target is this 1664. DAX, this is valid, but a long way off. Just wanted to put it in case people cannot tune in. This is valid. Double bottom. potential double bottom. Not for today. Today, so far, an inside bar. So when I have an inside bar, I focused on yesterday's high and low for the key moves. So that's what I will be focused on, especially if we do turn around and take out the low. Take out the low, 12,045. Notes, I'll get to the spiders and the Qs in a bit. The notes, yes, this was a valid double. Still is a valid double. First and second targets have already been hit. So if short term, the final target is 111.17, but that was a valid double bottom confirmed on this bar, triggered here, and first and second targets already hit there. So that's where I'm watching in the final target coming in with the end of the rotation zone. So I'm watching for finalizing that target, and the end of the clear path is slightly higher. Then I'll watch for the pullback play to judge the strength or weakness of the notes. Dollar index pausing here. Should see a retest of the high based off the probabilities 114.15. Key support coming back in now about 112.50, 112.54. VIX, if we start breaking down, which is bullish, key area we're a fair ways off of, but the key area would be about 32.50 because then we'd be targeting the gap fill play, and that would lean it to more bullish. We start breaking up about 33.50 with some downside price action. I am in the bearish camp. That's how I'm, besides using the tick, those are the two key things I'm watching on the VIX. Crude got the pullback level. Got the pullback. I said aggressive stop on a close below yesterday's low. Key support coming in at 88.27. Other than that, watching to see where we stabilize on this pullback. The next major support level is 86.65 to 87. By the way, 10-year or the, what was it? I'm just looking over here in for the Japanese yen. I had some notes. There has not been any Japan's 10-year government bonds untraded for third straight session. That's why I'm keeping a real close eye on the 10-year. So remember, they did their intervention. Look at this price action up by the intervention level. The markets are very skittish of short-term intervention. However, and they look to be setting up, not for intervention yet, to be discussing more substantial, but if you really blow through 145.90, you could see some acceleration of the upside into intervention. That's why essentially the Japanese bond market has frozen up, the 10-year. Also, you have Bank of England stepping in again with the doing more stuff with the gilts. So sort of expanding their gilt, which is supposed to be short term, but we'll have to see if that does expire. So we could have some interesting things in the currency markets lining up. That technically is bearish for the pound, but until can't get overly bearish in the pound unless we get the close back above 107.80. Euro, we did get the close yesterday, so still watching for a retest of the low area. Not necessarily today, but watching for that on a macro perspective. Your spiders and the Qs updated all the levels on this. Yes, we do have a long-term potential double bottom. Key levels, if we break down, 354.24, 351.44, major for capitulate. If we do trigger, remember, we're still set up for a potential capitulation move. Does not have to happen. But if we do, 347.92 to about 346.46. In that zone, I'll watch for a bottom of capitulation should we get it this week. There would be an aggressive buy above yesterday's high. In the short term, in the very short term, I know we're going to have the gap. Besides the gap play, the only bullish thing is above 360.75. On the Qs, besides, I didn't put that up yesterday with that double topping pattern. The key levels, a lot more support coming in lower in the Qs. 263.64, then 262.83 to 262.39. And then if we really start pushing down, 258.76 is the next key area. Cannot get bullish on the Qs. I know we're gapping down right near right near the most recent lows, and that could form a potential double bottom, but we'll be watching for the gap fill play before that. If we don't substantially trade lower than Monday's lows, we could be setting up for a mini double bottom play in there. So that's where we sit with everything with Tesla. Tesla flatlined down a little with the gap. So besides the gap, but Tesla finally hitting that 87.5. If we do get buying pressure, you still have the overhang of the Twitter deal, but remember, you still have a gap play overhead. I will be watching yesterday's high price should the market start getting a rally on. Why that would be a short-term move to the upside, but that's about it. And we have hit that 87.5. We are an oversold, but this is what I consider a story stock, because it's unknown whether Elon has to sell more after earnings. Remember, it's lockup period after earnings. And this earnings report was brought in to the 19th. One of the earliest earnings reports I think they've done. So this allows for potential selling. So there is that overhang in the market. But if that, again, you have the lockup until after earnings with Elon selling. The stock market looks depressed. Christoph's guts telling me we have choppy run in the CPI. We could have some movement tomorrow. Don't just completely focus on CPI. You got Fed meeting minutes and you got PPI. Yes, PPI is not important, but if PPI is a major beat or miss, you could get some decent movement tomorrow. Just remember the word potential for all the new subscribers. We play the probabilities and price action, but nothing is guaranteed. And we list off potential things which might never manifest. It's to prepare ourselves so we're not scrambling during market open or key things to, let me try to do my analysis, especially when we get blinded by short-term moves. If you note the potentials, especially if you need to write them down or set up alerts, that's why we do it. In the calm before the potential market storm, and a potential never has to trigger. It never even has to confirm. Thank you for pointing that out, Josh. Hey, Mike, are there any particular levels out there, the ones you gave yesterday, that you like on the tick? I don't overcomplicate the tick. Please. I see people trying to overcomplicate the tick. If you notice, the major ones I watch for potential, this is potential reversal moves, are between 1,000 and 100 on the big spikes. On the shorter term basis, as I talked about before, 400 to 600, and I don't even need to mark off these levels on my charts, 4 to 6, and then 8. And I watch those especially on closing bases on the little charts. And I watch overall for trend. Now, when we get key major pushes, like these are generally when you get pushes well below 1,200 or well above 1,200, those are generally buy or sell programs. Like this was a sell program on the open back from Friday when you get these major levels. This was a sell program back from Wednesday. This wasn't a buy program back for Tuesday on the 4th. So when you see stuff like this, especially on the open, they're major opening buy or sell triggers. Otherwise, you see, I start watching for short-term bottoms, especially, or short-term tops when you spike up. Short-term tops between 1,000 and 1,200, short-term bottoms down here. Like this is just a sort of a negative opening, which just triggered, but this was not a sell program. This is just a negative opening print. So now I'm going to watch to see, since we're getting the negative sell print and we are against pretty key support, I'm watching the market from this time because we'll recover into the tick, and then I'm going to judge that to see. We start rolling over and start getting downward tick pressure below 3,600. Then I listed off that 35, 90, 91 area, and we're into a shorter term clear path, so I will watch for the downward plays. We hold this area, especially getting above 36.10. Then I'll start focusing on more of an upward plays, but I'm going to gauge everything through the lens of the tick. So far, not a very big bounce. See, this is still, we've got decent selling pressure. But don't overcomplicate it. And if you want to know your overall trend of stuff, watch, the moving averages are on this chart, but I'll show you a little other hint. When your longer term averages are above zero, there's a slight upward pressure, especially on your very short term charts. Not on your long term, it takes too long to react. But I watch for this line, whether it's gravitating above or below zero. See, right now, for the last while, yesterday, see how it's been drifting down? Now, this is lagging, but we've had a fair amount of selling pressure, so it's going to take a fair amount of buying pressure to really get a rally on. So if this starts drifting back up towards zero, since it's a lagging indicator, and we start clustering up here with the tick, especially with key closes above 600, that gets me leaning into the bullish camp. And then I'm going to vet stuff through the VIX, and I'm going to use the trend. And overall, do not ignore price action, because now we're establishing an opening range. Could not get any sustaining movement around here, but no sustaining movement. So I'm still watching these key breakout, breakdown levels. If we get nothing confirming with anything, then we can sit with a choppier day. If we're into a choppier day because things are backloaded this week, then, there might not be anything to do, at least in the broad markets, unless we break down or break out above key levels. It could be sit on the hands and focus on other key things. I just need to peek in, and then I need to jump. SMH, because we got the Taiwan Semiconductor, big gap down. But what I wanted to see with the SMH, by the way, this is what there will be some bottoming play in semis at some point, but we finished the return to the 62.5, and we finished the overall bearish pattern. Does that mean it can't go lower? No, but now today especially, this is going to get triggered with that TSM gap down. I'm watching to see where semis recover, because 179.56 is key for the next long-term play. Would not be surprised to see a bottoming move set up in semis in the short term, though. Let's just peek. I will need to peek at that for my own stuff. Tesla's not doing anything. Tesla, this is just key support. If we get any bullish price action, it's just a gap fill. What was that chart that you said was the tick? I use a NYSE composite. The cumulative tick. You want the NYSE. You can also use tick Q if you're focused more on Nasdaq. Don't worry about the Amex. The two major ones I use are tick and tick Q. and the levels are relatively the same. You get more volatility in the tick Q, but it's the same. 1,000 to 1,200, key 800 on a closing. 4 to 6 is your bounce back zone. See 4 to 6. I start taking notice when we get above 800s. But this, so far, we don't have a lot of positive sustaining price action in. And also your tick Q is with the longer term averages below 0. So there is overall still selling pressure. So those are the two ticks. The NYSE is more important. The tick is more important to me than the tick Q. You're welcome, Legion. And this is again is more advanced stuff for the people who, all right, I've got some price action down. Let me try to fine tune it. Why is the tick important? Because it's the cumulative tick of what's going on the NYSE or the Nasdaq. So it's showing you overall buying or selling pressure based off the exchange of stocks. And it alerts you to buy or sell programs. Time period for the tick, I watch it on a shorter term basis, the 5-minute. I will tune in for a little larger at the 15. I don't bother going above the 15, really. It becomes useless. It's for short term fine tuning stuff. You see, so far we have we've had decent selling pressure into the open. No breaks below 1,200. So this is the key support zone right now for the tick. We've broken down. We broke below on the 5-minute below here, which I have to jump, but we still have not been able to push down below the next key level, and we have the tick finding support still. So overall, this market looks, could somebody type in their VIX? I don't have my trading, I got to jump and get my trading platform up. But could somebody type in the VIX real quick? Because this is delayed. I guess I could look at the other VIX. It's not as good. All right, we got a reversal. By the way, short-term 33.50 area, 33.45. If we start breaking back below there, we could not get that selling pressure overall, and I'll look to short-term bullish. There you go. Yes, and P, you can do your own research. All right, with that, thank you, Christoph. 33.50. So that's one of the, I'm 33.45. We start breaking down below that. I'm watching for this gap fill with the VIX, and I'll go into choppy to slightly bullish. If we hold that level, I'll stay in choppy to slightly bearish, which so far we are slightly choppy to slightly bearish. But overall, you see buying pressure continuing to step in. It has not been able to push down. So I'm leaning towards this is going to be a choppier day unless something changes drastically. With that, I'm going to wrap it up for now. I shall talk to everyone this afternoon. Bye for now.